And look at the marketplace. Look what we're pricing. Pause, hike, pause, cut. I've never seen that sequence before. It shows you that we are uncertain.
The crypto market today is in a bit of a pickle. Yes, I want to update you on this BitBoy news. Yes, the SEC has made its first enforcement action against NFTs. They have sued major channel Impact Theory and founder Tom Bilyeu. But the biggest news, and looking into next month, is that September is historically the worst month for Bitcoin since 2013. And like Bitcoin, the S&P 500 has also recorded downturns in most Septembers since 1928. So will Bitcoin crash again? Well, as mentioned the day this happened, Jerome Powell just made his annual Jackson Hole speech, reaffirming that inflation is still too high.
2% is and will remain our inflation target.
He is prepared to raise rates again if needed.
We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time.
And he doubled down that 2% inflation is still the target.
As is often the case, we are navigating by the stars under cloudy skies.
Again, an incredibly hawkish rhetoric, but nothing we weren't prepared for.
So first, what Powell did, and it actually came as good news to the markets, is he didn't say anything new. He maintained maximum policy optionality, and the market liked that because there was some concern that he may go and start talking about this R-star, longer-term issues, which actually are uncertain for markets. So the good news...
R-star, which is this theoretical neutral rate of interest, right?
Correct. What's really interesting is the two things he did say about the longer term. One is, and we have played it on the air, inflation, the target is and will remain 2%, very controversial. And second, that we are operating under the stars, but it's a cloudy sky. Right? These two things are really meaningful because away from him, and unfortunately there's enough coverage, there was a lot of discussion about how the global economy is changing, how supply side issues are becoming more important, and what does that mean for monetary policy. So the good news for the markets is they heard what they want to hear, which is nothing new. But the bigger news is that there are real puzzling, outstanding issues out there.
So with the current federal funds rate already at over a 20-year high, with the latest United States inflation still incredibly sticky and now creeping back up, and now with the next FOMC meeting in a few weeks, September 19th and 20th, what comes next for Bitcoin, for crypto, for markets?
So I think the market has changed its mind so many times. I mean, if I remember correctly, we went from soft landing to hard landing to no landing to crash landing in March to soft landing, and some people are talking again about no landing. So we've been all over the place, and that's because it is such an uncertain time. I think, Robert, the key issue is 2% the right target? That is the key issue.
He's got to say it is.
He's got to say it is, and there was a lovely line by one of the speakers, Professor Eichengreen, which is that we're going to tiptoe to a higher inflation target. We're not going to announce it. We're just going to end up living with inflation that's above 2%. It's going to prove to be stable, and at some point you're going to be able to make that transition. If that happens, that's great for the markets.
Do you think in an election year he can get away with cutting rates if it's 2.8, 2.9, as long as it has a 2 handle?
I think it's going to be hard if he continues to say 2% is and remains our inflation target. If he goes a little bit quiet on that, I think that...
Do you ultimately think they will wait to 2, or do you think it's...
Well, I mean, in the press conference in July, Powell said we'll probably be cutting before we get to 2. Right. I mean, just because of the math of what's restrictive, what's not.
But what we're looking at right now is a possibility that headline inflation will head back up.
Yeah.
And core inflation may not come down quickly enough. And it all comes down to services and wages. That's where the battle is being fought right now.
And housing.
So, there's a real issue as to whether we've broken the housing market.
Prices are going up. Rents are going up.
So when you go from record low mortgage rates to levels that we haven't seen for almost 20 years, you destroy both the demand and supply.
Right.
And that's the irony.
Yeah.
Is that supply has come down and demand has come down as well. That is the way you destroy a housing market. And we've got to be really careful because the housing market is central to the economy.
Be sure to click subscribe on Altcoin Daily And just understanding that September is always, or most times, historically bad for the S&P 500 and crypto, should we expect a deeper pullback? The most frequently occurring BTC drawdowns in September, that's around a negative 7%. This is a chart of Bitcoin monthly returns, and we see in September, most months are red months. And while sometimes we've seen a 19% drawdown, sometimes it's just been a 1% drawdown. The most frequent is around 7%. A 7% drop from the current price levels would see BTC drop to around $24,000. And let's remember this, just a few more days until the SEC has to respond to 6 different spot Bitcoin ETF applications. The SEC will have to comment on BlackRock, Bitwise, VanEck, WisdomTree, Fidelity, and Invesco filings before the weekend ahead. What do you expect? Well, most investors are just expecting a push. This is the SEC's first deadline, but then they'll have a second, a third, until they have to make a decision one way or the other, when they can no longer just kick the can down the road. And that's usually the trend the SEC is known for in the past, and typically the trend is your friend. Now, many of you have been asking me about the recent charge from the SEC against Tom Bilyeu, who is the founder of Quest Nutrition, also huge channel, Impact Theory. Well, officially, the SEC makes its first enforcement action against NFTs, sues Impact Theory, and the case has been settled. So the SEC fines LA company $6 million over NFTs sold as securities. And just as a reminder from this clip from over a year ago.
Do you know Quest bars? Well, the entrepreneur behind them is getting into the non-fungible token craze.
So the project itself is called the Impact Theory Founders Key, and we like to say that it unlocks the future of everything that we're doing as a company. I realize what it allows you to do is reward your community. And for somebody like me who's trying to build the next Disney, what you need is a thriving community.
And if you're asking why them first? Well, a big reason is the language they used to promote it. The SEC's findings indicate that Impact Theory actively promoted these NFTs to potential backers as a direct investment opportunity in the company. They conveyed that purchasing a founder's key would yield returns if the firm thrived, often drawing parallels to their ambition of emulating the success trajectory of major entertainment conglomerates like Disney. Thus, the SEC alleges that these NFTs were security investment contracts, and by extension, Impact Theory made an offering of unregistered securities when they sold these NFTs. And in response to these allegations, what did Impact Theory say? In response to the SEC's findings, and without admitting nor disputing the charges, they settled. Impact Theory has agreed to a cease and desist order. Now, the bigger thing to me is they do have to destroy all these founders' key NFTs, right? That's unlike the settlement with EOS, where they had a slap on the wrist, they paid a fine, but EOS still exists. But it is interesting because while they only had to pay $6 million to the SEC, the company raised approximately $30 million from a diverse group of investors, including some based in the US. So they raised 30, had to pay 6, and the NFTs have to be destroyed. Another story in crypto making headlines all over, BitBoy has been removed from his company amid corporate coup. They've released an official statement, and also, just branding-wise, you can see they took Ben, founder of BitBoy, off of all the logos. Why did they do this? Well, their official statement cited financial damage and substance abuse. Here was a quick statement from their live stream this morning.
Yesterday, BJ Investment Holdings, the parent company of Hit Network, took decisive legal action in removing Ben Armstrong from the company, and specifically the BitBoy Crypto brand. This is a difficult decision, is a culmination of a prolonged effort to help Ben during his relapse into substance abuse, as well as reconcile the emotional, physical, and financial damage he has done to the employees of Hit Network and the BitBoy Crypto community. The Bit Squad deserves better, and we're going to get through this together. We wish him the best and regret that it has come to this and are hopeful for the future of BitBoy Crypto. Hit Network is committed to empowering creators, and we will continue to do that every day. Thank you.
Now, obviously, they continue. Check out the full live stream on their YouTube if you want the full story. Now, Ben, BitBoy Crypto, Ben is disputing these charges. I don't want to get into it. I just want to keep you updated. I obviously wish the best for both parties. Obviously, health is the most important thing. And quick update on meme coin PEPE. Pepecoin say bad actors on their team stole 15 million PEPE. So why is PEPE crashing? Well, most of you have heard by now. An announcement to the PEPE community. Yesterday, or a couple days ago, on August 24th, a series of unexpected transactions took place from the PEPE multi-sig centralized exchange wallet, in which 16 trillion PEPE coins, worth about $15 million, were transferred to various crypto exchanges, i.e. some members of the team sold. Well, the official statement today is some rogue developers on the PEPE team were behind last week's unprecedented transfers, and in a direct quote from a developer who claims to now be in full control, back in control of the project, he said, since its inception, PEPE has unfortunately been plagued by inner strife, with a portion of the team being bad actors led by big egos and greed. There has often been conflict, and actually the majority of the team involved in PEPE's creation started to distance themselves after just the first week of the project's inception. The current devs says they're trying to decentralize the project as quick as possible, but for me, I just use this as a reminder, cautionary tale, investing in crypto always is risky. Be sure to join us in Amsterdam at the Bitcoin conference. Use code ALTCOINDAILY for 10% off your ticket, as well as in Singapore for token 2049. Like always, see you tomorrow.